Welcome to FinSights Daily by Finvestin, where we cover the daily updates from the world of finance that impacts your day-to-day life. I'm your host Narendran. Quick reminder, play this episode at 1.5x for a better experience if you are short on time. Let's start with today's headlines news that's shaking the markets. President Donald Trump has announced a 26% tariff on Indian imports, effective April 9th. This is significant news for our economy as it could lead to increased prices for Indian goods in the US market, potentially affecting our export sectors. The immediate market reaction was clear. The Nifty slipped below 23,300 level today as investors process this development. But it's not all gloom and doom. Let me highlight three important factors that could moderate the impact. First, the pharma sector has been excluded from these tariff burdens, which is a relief for one of our key export industries. Second, Trump has imposed even higher reciprocal tariffs on China, Vietnam, Bangladesh, and other Asian countries. This might actually give India and Indian products a competitive edge in the US market, mainly textile segment. Third, economists believe that India's bigger challenge will not come from this tariff themselves, but from the overall global growth slowdown and heightened financial volatility that these trade tensions might trigger. Now, turning to some positive domestic news. India's Manufacturing Purchasing Managers Index, or PMI, rose to 58.1 in March 2025, up from 56.3 in Feb. This data was released yesterday by HSBC and compiled by S&P Global. For those of you who are wondering what is PMI, it's an economic indicator that measures activity levels in the manufacturing sector. A reading above 50 indicates expansion, while below 50 signals contraction. At 58.1, our manufacturing sector is showing robust growth. Let me break down what's driving this impressive number. The new orders index hit an 8-month high of 61.5, showing strong domestic demand. While international orders slowed slightly, the overall momentum remains solid. Business expectations are optimistic too, with about 30% of the survey participants forecasting greater output volumes in the year ahead. Less than 2% anticipate a contraction. This manufacturing strength is particularly important as it often leads to job creation and wage growth, which ultimately feeds into consumer spending. The third and final topic of today is about PFCE. Before talking about it, we will see what our economists view on our India's consumption demand. Aditi Nair, chief economist at ICRA, points to three key factors for an upturn in domestic demand in the year of 2026. The considerable income tax relief that is announced in the recent budget, expected continuation of monetary easing, that is nothing but reduction in interest rates by RBI, and significant downturn of food inflation. Another economist, Yuvika Singhal from Quantico Research, highlights another positive sign, the recent uptick in urban or job openings with positive growth record over the last 3 months. Let's talk about what this means through the lens of PFCE, or private final consumption expenditure. For those who are not familiar about this term, private final consumption expenditure, that is nothing but the total value of goods and services consumed by our households, that is, you and me. It's the largest component of our GDP, contributing over 56%. The projections are encouraging. PFCE growth is expected to reach 7.6% in the financial year 2025, up from 5.6 in the last year. Economists believe the income tax cuts alone could lift PFCE growth by 60 basis points. What does this mean for you and me? Higher PFCE typically translates to business growth, more job opportunities, and potentially better salary increments. This is what everyone expects. And also, per capita PFCE is expected to rise by 6.6%, reaching 75,723 in financial year 2025 from 71,016 in the previous year. However, there is one important caveat. These projections assume a normal monsoon. As we all know, the monsoons are not really the favorable outcome it comes as we expect. The agricultural sector remains a critical variable in India's consumption story, especially for the rural demand, which contributes more to the GDP than the urban demand. Let's see how this pans out. Well, that's all for today's FinSights Daily. Thank you for joining me. This is Naren signing off. I'll see you in the next episode with fresh updates from the financial world. Have a wonderful evening and remember, stay financially savvy.